the third one was the auto enrollment tax credit, right? So maybe we can just go into that one as the kind of the final part of this part of the podcast, and just go into a little more of how it's calculated to, does it apply to only to new plans, pre-existing plans, and maybe give a little more detail on that if you could.
Perfect. All right, so I'm going to jump right into the auto enrollment tax credit. There's also another brand new tax credit. The reason the government decided to do this is because most employees do not opt in to go into a plan.
Okay.
So very often you start a 401k plan at a company, and the employer, his wife, and maybe 2 or 3 of the, let's call it the more sophisticated employees or the more financially savvy employees, they'll participate. You may have 10 other employees. They don't even bother filling out the paperwork. They don't participate.
Yep.
So what the government's trying to do is
definitely what happens
all the time.
Yep.
So what the government's doing is now they're reversing this on them. They're saying if you take no action, you're automatically going to go into the plan. And if you don't want to be in the plan, you have to fill out paperwork to get yourself out.
Okay.
So, and again, I like that idea. They're forcing the hand of the employee so that they can be financially responsible, so that one day they're going to have money set aside for their retirement. So I like that. I usually don't like it when the government sort of forces you to do something. So they're making you do it, but you could always opt out if you want to.
Okay.
So with this credit, I'm not getting as excited, but it's a $500 tax credit per year over a 3-year period.
Okay.
So you could end up getting about $1,500 in total back related to that. And all you have to do is allow your employees to opt into it. So if you were in practice prior to December 29th, 2022, you're grandfathered into the old rules, which means you're not mandated to do this.
Okay.
But any practice that went into effect after December 29th, 2022, by 2025, it's going to be mandated. Every new plan has to be set up with auto enrollment, where the employee has to elect out if they don't want to do it. So, we are not encouraging every employer to do this if they're not required to, because some of them may be forced to make contributions. But again, if you qualify for the contribution credit, I think it's something you have to rethink here. So definitely a valuable credit, but not quite as exciting as the contribution credit I spoke to you about earlier. So auto enrollment will apply to 401k plans and 403b. 401k are for-profit dental practices. If you're working for a hospital, their plans are called 403b plans. They're going to be under the same type of guidelines here as well. So I think it's a great concept. It's yet another way to save some extra money, get some extra money in your pocket, and sort of push the hand of your employees. If you're not mandated to do it because your plan was in existence before the beginning of this year, before December 29th, you really need to study what the cost of doing it will be to your practice. If it makes sense, then just do it, and at least have that be your policy for the 5-year period where the contribution credit exists. So a couple other things. The government did make a few exceptions to this. Even if you set up a new plan, if you have 10 or fewer employees and you just went into practice for yourself and you just set up a pension plan, you're not mandated to do the auto enrollment as long as you have 10 fewer employees. They're just trying to give small businesses a little less of a burden and headache there. This doesn't apply to simple IRAs. It only applies to 401ks and 403bs. Simple plans are exempt from this requirement. And the last one is if you're in practice for less than 3 years, a brand new startup practice, they're not going to impose this requirement. They have to automatically enroll your employees. Other than that, churches and government institutions are also exempt from this as well. So again, not exactly $50,000 a year like the contribution credit, but the way I look at it is if there's another $1,500 on the table there that I could get for you or any client, I'm going to squeeze that money out and make sure I put you in a position to take advantage of that.